Shifting our focus over to the grain markets now. This week we are joined by Darin Fessler from Lakefront Futures and Options. Hey Darin, thanks for coming back to Market Journal.
Thanks so much for having me.
Well, let's talk about the news of the day. You and I are recording this conversation on Tuesday. I want to make that emphasis as early this afternoon, we've got some news coming out, Darin, that a Russian missile strike crossed into Poland here. Not a lot in the U.S., at least. They're not confirming a lot here. But what could that mean and what kind of impact could that have on the grain complex?
Well, it definitely had when that news broke, or at least the headline broke. I mean, everything was, you had equities come off and you had grain spike higher. So with the idea that the headline had said, this bomb maybe attacked a grain facility in Poland, that obviously put a little bit things on edge. Now that little putting on edge, grain markets, corn, wheat had been really beat up, but it put a little spark under the beans as well. So again, that risk off on what we had seen over the last week on commodities, now it's risk on again. So we got to watch these headlines very carefully. We don't know all the details just yet, but definitely gave a little bit of excitement here this afternoon for the grains.
Shortly after that happened, you tweeted something out about the risk in the headlines is equaling some opportunities. Tell me more about what you mean there.
Yeah, I think more in particular that message was for corn, because if you look at the corn structure, there's not a whole lot of carry between December and March and May, and there's even May is at an inverse to. Or May, I should say, March is at an inverse to May contract. So the market's not really paying you at all, really, to hold bushels past March. And you look at the strong basis levels around the country, the market's saying we want those bushels and we want them now. We don't want them in July. We want them now. And so you look at the export structure as well in corn, and you got to really start thinking, okay, what is my goal here? What am I trying to accomplish by holding my physical bushels? Do I believe the futures are undervalued here? Do I believe the basis is going to strengthen more? Because right now, if you hold corn from March, let's say, to July, you're already losing 5 cents by doing that. So is the board or the basis going to increase more than 5 cents? Or with the higher interest rate environment, is that opportunity cost worth my time holding it out to next summer? I think it's a pendulum that guys are going to have to be really questioning. To me, I've been in a camp of continuing. If you get these rallies in corn and beans, even for that matter, is to scale in and continue to reward what the market gives you at the moment. We can always re-own that, have other strategies on paper.
Yeah, Darin, you talk about re-owning that and some of those other strategies out there, but I'm sure it boils down to FOMO, the fear of missing out, and the producer out there wanted to hang on to that in storage for perhaps trying to see some better prices. When you look at the corn and soybean side of things, do you see a potential for higher prices as we continue through the end of 2022 and early 2023?
I think you could see higher prices. Again, today's announcement or today's headline risk is obviously going to be a backdrop on that. Now, again, I think corn has been beat up here. I think wheat has been beat up here. I think wheat relative to corn is really beat up. Again, I think if we do rally back towards this $6.80 to the $7, whether that be on the Dece or whether that be on the March, I think those are opportunities for producers to again scale in here. Given the poor exports, if things are on the same path that they're on right now, from now until February, March, we're already going to be playing catch up. We're playing catch up right now. So the question that I have for the market is, if exports remain weak, and let's assume they will, what is there to get the corn to 750 even? Or maintain these levels. Now, granted, the tight stocks use ratio, the balance sheets are tight on both the corn and the beans. That's going to keep things supportive. Okay. The other question, or the other part of that equation, how does South America pan out? How South America pan out is simply, if they have a good crop, can corn maintain strength if beans do sell off? Okay, the bean strength has been driven by soy oil, the veggie oil, palm oil markets of the world. So the question and the pendulum is Brazil. It all comes down to Brazil. Even if Brazil has some weather issues, those weather issues I think are going to have to be worse than they were last year, simply because Brazil is going to have sheer acreage increases year over year. So they don't have to have a record crop from a yield. They just have the acres, and so that that puts the corn market, the bean market in an uphill battle. Not saying we can't get higher levels, but again, at the very moment here, rallies should be rewarded here. But again, basis will probably be strong in the Western Corn Belt for now.
Darin, want to include a viewer question we got in this week. Here's what the question, how it reads: what would a recession do to the grain markets? Your thoughts there?
Yeah, I've been very vocal on Twitter about this. I already think we are in a recession. But again, if you look at the CPI data, the inflationary data had come in just last week. So if we start to see this continuation of declining inflationary data, if that's what the Fed is going after the CPI number, the PPI numbers, if they start to see that come down, obviously that puts a backdrop of the Fed increasing rates on the back burner. It shifts money. I think it's all money flow at that point. It shifts money from commodities, which have been an inflationary type of run, towards stuff like equities, the stock market. That's what you had seen over the last week. But if you look at some of the job layoffs that are coming in the economy, well, that really doesn't bode well for stocks. And we all know inflation is probably a lot higher than what the official headline inflationary CPI number is. So again, I still think that there is still inflationary pressure that's going to keep commodities as a whole elevated for the time being. But there's that risk, though. If you look at a lot of these commodities that have been driven higher by inflation, they have a hard time sustaining rallies, crude oil being one of them. Again, we look at diesel supplies, a 25-day supply, that's bullish. But again, it's the deflationary risk that I have that the longer term, maybe over the next 6 to 9 months, that I'm concerned with when it comes to commodities as a whole.
All right, Darin, as we wrap up, just a few seconds here. Any particular advice you want to leave our viewers with today?
I think you really got to look at where your storage is, look at what your goals are for the corn market. Again, the market's not paying you to hold it. You're getting strong basis right now. Do you reward it now, or what potentially do you see going out forward? Again, basis in parts of the Western Corn Belt, especially the western parts, southwestern parts of Nebraska, are going to remain very, very strong, in my opinion.
Darin, we appreciate the time.
Thanks so much.